Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Now, Kelvin, thanks a lot for coming in.
Yeah, my pleasure again, Brian. Yeah, as usual.
Now, Kelvin, before we get your insights, we're going to first take a look at how crypto markets are performing, and then we're going to take a look at regional stock markets. So we will start with Bitcoin, which is at 58,000 at the moment. It's at up 3.43%. Ethereum is at 3,652. It is up 4.16%. Now, if we look across the region to regional markets, we've got a sea of green. We've got the Nikkei, which is at 28,486.33. It is up 1.26%. The Shanghai Composite is at 3,567.14. It's up 0.15%. The ASX 200 is at 7,341.4. It is up 0.95%. The Kospi is at 2,974.88. It's up 1.03%. The SGX is at 3,167.38. It's up 0.35%. Rounding up the numbers, bucking the trend is Bursa Malaysia, which is at 1,591.54. It's down 0.55%. Kelvin, tell us, what's your view on market performance this morning?
Yes, so if you could see the current market performance, right, to me, I liken it more to a reduction in long-term global funding costs, okay, which is pretty much crucial. So if you look at the current move of the markets, especially since so far this week, we talked about 2 or 3 days ago, markets have been kind of in a recovery mode after we're talking about the sell-off that was seen about a week or two ago. So one of the reasons, if you look at the current, we call it correlation, is actually a kind of a pullback in the US 10-year Treasury yield. So if you look at the US Treasury yield since the start of this week, which is on the 11th of October, the first half of this week, yeah, it hit a high of close to about 1.6%, and it now started to inch downward lower to 5 basis point lower, which is 1.55%. So that actually kind of add a bit of, we call it a bit of consolidation mood or a bit of risk on mood for equities to actually inch up higher that so far that we see this week. So I believe that this is one of the catalysts that is actually supporting firmer equity prices in general right now.
Now, Kelvin, this morning, the Monetary Authority of Singapore sprung a surprise. It tightened policy as they announced that the economy grew 6.5% in the third quarter. Talk us through this and its implications.
All right, so if we look at the current situation right now, especially in Singapore, because Singapore is a small open economy, that means we import everything in terms of energy and food. So the thing about is Singapore monetary policy set by MAS is a bit different from other developed nations. Let's for example, talk about the Fed or the Euro or closer to our home like Bank of Japan. So they actually target interest rate or money supply. Whereas for Singapore, we don't target interest rate or money supply. We target foreign exchange index. We call it the Sing-Near rate, which is a nominal effective foreign exchange rate base currency in Singapore versus our trading partners in terms of flow. So what it means that over here is that today's policy, right, it actually adjusts the slope slightly upwards from 0 to okay, they didn't tell us the gradient, how much actually the slope will be, but so it's just that it actually adjusts slightly upward from kind of a 0 growth to a certain percentage of growth. So that actually implies, right, a kind of they allow the Sing dollar to actually have a kind of a controlled appreciation against the basket of currency that MAS is actually watching under the Sing-Near index. All right, so what it means that over here is that we are trying to actually cool down imported inflation, be it from food, from raw materials. Okay, but on the other hand, as you know that there are actually 2 other ways that we can actually conduct our monetary policy for MAS is to actually kind of shift the midpoint of this channel that the signal is allowed to evolve in, or the upper and the lower band of this channel. Okay, so the MAS actually chose to actually adjust the slope of the channel instead, rather than the widening of the band or the midpoint. So widening of the band and the midpoint is a more drastic, we call it appreciation or depreciation of the Sing dollar, depending on whether you're having a tighter monetary policy or looser monetary policy. So what the MS choose to adopt is more of a controlled tightening rather than an all-out tightening. Okay, you see, because don't forget over here is that Singapore itself, right? We are still a kind of a export-dependent country in terms of exports,
Yes.
or re-exports we call it. Yeah. So if we were to tighten it too tightly, that means, i.e., we start to move the mid band upwards. That means we are talking about a more significant appreciation of the Sing dollar against our trading counterparts. So that will be very kind of yes, it can control inflation, but on the other hand, it will actually be more detrimental to our economic growth, which we do not
Yeah, of
want
course,
right now,
because you're
especially.
less
Yeah.
competitive relative to your trading partners.
Yes, yes. So we should actually watch to see how it goes. So it's a more of a cautious approach. So one thing what surprised the market over here is we tend to jump ahead of the Fed instead. You see, you know what
Yes.
I mean? Yeah, rather than we followed the Fed that we tend to be in the past. Yeah.
Yeah, so according to the Fed minutes in September, they're reducing the pace of monthly asset purchases as
Yes.
soon as mid-November. So that's the
Correct.
signal there. That's one signal there that we need to get your opinion on. The other thing is this whole inflation story globally has really run its legs because you've got inflation from energy prices, you have inflation from supply chain issues.
Mm.
So there's and then now you've got a tapering happening. So tell us how this is all going to evolve.
Okay, so the problem with right now, right? Okay, what's inflation, right? There is a cost related or supply related or demand related, two ways. So right now, right, it seems to us that it's more cost and supply related rather than demand. So once you come to a cost or supply related issue, right? Supply related inflation, that means you're talking about the oil market that is structurally right now there is less oil because
Yes.
OPEC do not want to pump out so much oil. And a structural issue is due to number one, there's a shift of alternative cleaner energy, which is net gas eventually, but we do not have the infrastructure to supply a higher, we call it demand of net gas needed because due to this shift towards cleaner energy initiative that the whole world government is actually driving into. So this is more of a structural supply issue that central banks have no control over rather than the demand issue. Because
Yes.
inflation from the demand side can be actually cooled down from interest rate hike. I mean, that's one point in terms of to actually temper the what I call that the what I call the over optimism of businesses or consumers to actually consume more goods or services because eventually that could actually drive up energy prices as well. Okay, or food prices, or we talk about raw material prices. So right now the central bankers are seems to be tight in terms of their hands. You see, so what they can do right now is actually to provide a bit of forward guidance. Okay, don't forget over here is that right now, you and I, we start to see inflation that's going up. Because the whole world knows, right? Inflation going up. So
Correct. And
it
also
may
that
be cut. Yeah.
inflation is not only on a macro level, but if you can see across regional prices, and you're in
Yes.
Singapore, I'm in Malaysia, when you go out to buy things, you can already see the prices have gone up.
Yes, precisely. So right now, the next thing over here, there will be a negotiation between employees and employers on wages. Okay, so because everybody now start to see that, hey, we know that inflation is going up, our pay package will get lesser and lesser day by day, okay, in terms of, when you get real wages. So there will be what I call a significant negotiation or intensity of negotiation of higher wages because the expectation of higher inflation starts to increase as well in the near
Yeah.
future because we tend to actually project forward, you see.
So this is
So
completely now away from the narrative of Chairman Powell, which is this looks like transitory inflation. The markets are now starting to price the fact that it is not transitory
yes,
inflation.
precisely. Yeah. So now the only way for him to actually cool down this expectation is that he got to be a bit more bold in his forward guidance as well. In terms of, hey, we are watching this current inflation pressure is in our radar. We have the available tools to actually tend to negate it. Because unless that comes out from the Fed guardians itself, Fed guardians over here, in the next Fed meeting. If that doesn't really comes out, I believe that inflation pressure will continue to heighten, both in
Mhm.
terms of the current headline numbers, as well as expectation as well. So I believe one thing is that the Fed also knows it. If they starts to provide hawkish guardians in advance, rather before starting to tighten the interest rate hike. I mean the first interest rate hike. I mean to start the interest rate cycle, what they may afraid is that they may afraid to cause a disorderly unwinding in risk asset like
Yeah.
equities. So they are actually watching equity prices implicitly as well, rather than the real economy. So I think their hands are pretty much tied right now. It's pretty much challenging for Powell and his gang to actually navigate through this current situation right now, after we call about close to a decade long of a high liquidity environment, which is i.e. low interest rate environment that is driving off, we call it not real asset prices, but rather asset prices that is related to the financial markets. Yeah.
Now, Kelvin, thank you very much for your interesting insights today.
Thank you, Brian. As usual, my pleasure. Yeah.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.